I'm meteorologist Jason Caterina on AM 560, The Answer.
Get the latest weather, traffic, and news updates online at 560theanswer.com. Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft on AM 560, The Answer.
Top of the morning, Dan Proft here. As we talked about with Jim Urio yesterday, and we've talked about with Scott the Cow Guy and Jim Perry, Brian Westbury, all of our financial gurus whose expertise we rely on. The Department of Labor's monthly jobs number is just garbage. I mean, I don't think most serious analysts pay much attention to it other than directional. And it's really not gotten any better under Trump than it was under Biden. The Labor Department had reported a gain of 22,000 jobs in August. They revised that down to the economy actually losing 4,000 jobs. Okay. As we said, before the number came out yesterday, the prediction for September was 50,000, and the DOL reported 119,000 jobs created in September. But who knows what the revision will indicate? That's not what's interesting to me. What's interesting to me and what I do think is relevant, not the aggregate, but the actual real world layoffs that are being announced, the impact. UPS disclosed in a recent earnings report, 48,000 workers were laid off this year. Verizon announced it was laying off around 13,000. Amazon, 14,000. Target, 1,000 employees laid off, 800 open roles eliminated. Paramount is cutting 10% of its workforce. The U.S. mass layoff warnings are rising. 39,000 Americans were given advance layoff notice in October. That's the second highest since the 2020 pandemic. And we know these numbers are accurate because they're required under the WARN law, WARN Worker Adjustment Retraining Notification for employers of a certain size. So 39,000 Americans given layoff notices last month, second highest since the 2020 pandemic. In addition to that, Challenger Gray and Christmas, which is, as I'm sure people know, Chicago-based employment agency, the overall number of job cuts that employers publicly announced in October was 153,000 and change, which would be the highest for any October since 2003. And yet, I know we see the unemployment number at 4.3, 4.4%. Which basically in a bygone era would be full employment, but not at the labor participation rate we have. So what should we glean from this data to help us understand? Please be joined by James Perry, founder, CIO, Perry International Capital Partners. Jim, thanks for being with us.
Thank you, Dan.
All right, so that was my intro. Pick it apart. Tell me where I'm wrong, what we're not seeing.
Well, I couldn't have said it better myself, to be honest with you.
Thank you very much.
This data is garbage. This is a typical government agency. Everybody who works at the Labor Department is working remote. They don't have to go back to their offices, and the surveys are a bit like, it's kind of like the hard data that we see in the economy and the soft data say two different things, right? So all this soft data like University of Michigan consumer sentiments and even these job surveys, these are diffusion indices, and they make phone calls on landlines to households, right? So from 9 to 5. So who picks those phones up, right? This is the kind of stuff that you get, and you kind of say, well, as an analyst and as a serious investor, do you really put a lot of stock in the validity of these surveys? And you can't, because the market certainly doesn't trade off of them.
Well, what about the actual? What about the actual those actual numbers we can rely on about layoffs at big companies like I ticked off there? What if anything does that indicate? Is that in part seasonal? Is it a part the integration of AI eliminating positions? What do you think is happening?
That's a good point. I do think that the Challenger Gray stuff, for example, is probably fairly accurate. I think what your listeners have to pay attention to, and investors in the country have to recognize that, this is a period of great disruption, and you are going to get a lot of it, and much of it is transitory. The government is sort of 25% of GDP, and the government is shrinking, and that's a really good thing. So that's point one, and I'll go into that a little bit more in a second. But the other thing is, this labor participation rate is really quite low, 63%, 64%. That means, almost 40% of eligible workers are not working, right? So the unemployment rate, we are at full employment, by the way, and there's a shortage of jobs in the United States. 3 to 5 million jobs are not being filled right now. So I don't put much faith or confidence or gravity into the employment numbers, because the government doesn't pick up, maybe 20 million people who are working and don't pay taxes, illegal immigrants, they work. Most of the people that come into this country are good people, and they work hard, and they are spending money. So the economy tells you a lot different information than what the government's employment reports speak. And the GDP in this country in the third quarter grew at 4.2%, right? Furthermore, and this is from the Atlanta Fed, by the way, furthermore, by Q1 in next year, the economy is tracking to grow by over 5%, right? So the economy is not going to go into a recession. And when people think about these non-farm payroll numbers, first of all, they all get revised in the next month or two, so nobody should pay attention to them. And the stock market did not go down yesterday because of the employment report.
No, but so let's talk about that. We talked about that with Yurio yesterday. Right. I want to get your perspective, which, this fear of an AI bubble. And if you think this is just the growing pains associated with the AI revolution and, all the focus, both in terms of attention and investment dollars on that. And there's, just as when the internet was in its advent, this is the example Yurio used, when the internet was in its advent, you had some ups and downs too before the thing was really consummated and people had a better handle on the sort of growth opportunities, who the winners and losers were going to be, and what the trajectory was going to be. Is that all that's happening now with AI, or is there something else?
And that's a really big question, and it's a very good one, and it's the thing that's on everybody's minds. I will tell you very simply, I've been doing analysis and research on the stock market and the bond markets for my whole career. And if you just look at the numbers, it is quite clear that this is the largest investment cycle in U.S. history, and it's just getting started, right? Microsoft reported that in 2024, total business AI spending was $1.7 trillion. Now you have to separate, the data center part of that, which is about 400. The data center build out will be $1 trillion in the next 24 months, right? And total AI spending by the end of the year will be approaching $4 trillion, right? So, and people say, well, you're spending so much money and there's no revenues. If somebody says there's no revenues, they really need to look at some of the earnings reports. You were talking about, UPS and Walmart and some of these companies that are laying off people. If you listen to the earnings report for some of these companies that are reporting, every single one of the chief executives and the chief financial officers are bullish. And they're saying, and rightfully so, profit margins in Q3 were up 13%. Broadly speaking, blended in the S&P 500. And in the technology sector, profit margins were almost 30%. So the Metas and the Googles and the Microsofts that are spending money and borrowing money to put deals together, they are supported by tremendously strong balance sheets, tremendously strong cash flows, and tremendously rising revenues and earnings in the AI space. And that is going to continue.
So with this dip in the market over the last week or so, are you rebalancing your portfolio at all, or are you just sticking it out, seeing this as a blip?
My portfolio is unchanged. I'm about 82.5% invested in the stock market. I guess normally people would be sort of 60% or 50%. So I am overweight the technology sector. I am overweight the defense sector, and I've got some gold. So it's been a very, very good year for most investors. And, if you think about the stock market, you have to remember that long-term investors, pensions, portfolios, this sort of stuff, the stock market, it's up 40% from the April lows, right? And it's up 200% from the pandemic lows just in 2019. And it's up 900% from the lows in the great financial crisis. 900%, right? That's in 15 years. This is one of the most remarkable moves in the stock market ever. And there's been at least 5 25% down trades, right? This one, right, we're getting this month is 5%, right? So the S&P is still up 11% for the year. Technology sector is up 22% for the year. These are big numbers. So the point is, investors who are looking at this, are they going to sell because the stock market is down 5% in the last month? No, they're not going to. Are people selling into year end and taking some profits and doing a little bit of rebalancing? Sure, why not? You should, if you want to. Take some money, book it, and show a great report to your shareholders and your investors at year end. So I think there's a lot of people that are taking some money off the table, and that's fine. But these are sort of tactical trades more than sort of systemic trades, And I think tactical trades, you have to be careful for them, because if you read all the headlines, for heaven's sakes, you sell everything, right? I mean, you listen to any news and the Wall Street Journal, it's like everything you read. Bloomberg, I've got a Bloomberg. Everything on it is negative almost every day. So if you pay attention to some of this yakking and complaining and fussing about things that are going wrong, you're missing the big picture. And the big picture is that, there's a shortage of jobs, there's a shortage of housing, wages are rising, corporate profitability is rising, and corporate balance sheets and household balance sheets in aggregate have never been better. So I think that, your investors and your listeners should recognize that, into a year end after a big rally like we've had, it's very normal to see some profit taking. I wouldn't pay attention to it. I wouldn't get out of this market. I'm at a conference in Palm Beach right now. It's a global disruptive technologies conference, right? And there's, 400 people here, something like this, put on by Clear Street. Michael Saylor was speaking yesterday, right? He's the big shot that owns, 600,000 Bitcoin. Eric Trump was here, too. And
he's taking a bit of a hit.
Yeah, he has. His Bitcoins, he's almost back down to break even on some of his leverage trades, but I think he'll be
interesting.
fine.
Well, I mean, you can finish your thought on the tech conference, but I mean, fold in Bitcoin down about a third in the last few weeks, and does that tell us anything about crypto?
It does. I think crypto. I'm not an owner, right? I would rather have gold rather than digital gold. So I do. I've got a 10% position in it, and it's been the best performer of the year, and it's still doing quite well. But Bitcoin, it's not money, right? It's really capital. It's just kind of it's not a medium of exchange per se, but it has the same sort of connotations, that duality that gold has. But you can't really spend gold. You can spend Bitcoin, and I think that's coming. And everybody here is a bullish crypto dude, everybody. So it's kind of like I've heard crypto coming out of my ears for 3 days here,
Well, even if it's like, I don't want to say this because it sort of sounds silly, but and just completely speculative. But even if you don't believe in it, because it's one of these you can't fight City Hall type of deals, right? I mean, BlackRock's in, all these guys, all these bigwigs that you're at this conference with are in. So it's like, you go with that flow because you expect that they know, or that they can manipulate to an outcome.
That's right. I'm going to get. I made a lot of notes when Michael Saylor was speaking, and I'll put together a little note on it and I'll send it to you.
Great.
It's a pretty compelling story from a guy who's probably the most bullish guy on Bitcoin on the planet, right? So, I'll give you the bull argument on Bitcoin by a transcript or a video tomorrow, okay, or over the weekend. And I think everybody should recognize that it is coming. The blockchain is here, and stable coins are here, and the tokenization of everything is coming. And I think that it's going to reduce costs, and profit margins in the financial sector and in retail are going to go up because of it. So the infrastructure behind stable coins and the ledger, which is blockchain, is being incorporated across the economy in every single business, in every sector of the economy. And it's really powerful. And when you talk to the executives that are here, the word that comes up the most is productivity is rising and profit margins are going up because our costs are going down. And that's a really, really good thing for the economy.
Well, let me ask you something, though, about, the universal ledger and all this business. Mm-hmm. Okay, let's say that comes to pass. So how does that make Bitcoin or Ethereum or stablecoin necessarily more valuable? I mean, it's the underlying technology, but so
right.
what? How does it generate revenue or value for these individual cryptocurrencies?
Yeah, I agree, and that's the big question, and that's the question I have too, right? I didn't get a chance. I put my hand up. I wanted to ask a question to Michael Saylor. He didn't pick me.
How dare he pass over Jim Perry?
But people did talk about it, and he says, and the bulls in crypto will tell you they have no idea what the value of a Bitcoin is, right? Is it 80,000? Is it 120,000? Is it 5,000? I don't know. I don't even know what the value of gold really should be, right? So that's a very subjective kind of issue. But if you recognize that Bitcoin really isn't just a coin or a currency of some kind, it really is an infrastructure. And the infrastructure behind Bitcoin is expanding and accelerating and broadening throughout the global economy. And it's really helping countries that don't have good central banks or a good banking system. He brought up the subject, I think he was talking about Brazil or something like that. If you get a paycheck in a country like Turkey or Brazil or Zimbabwe, and your country's inflation is running at 50%, by the time you get your paycheck on a Friday and put it into the bank, you're down sort of 3% on your wages for the week, right? So if you can get your wages on a phone into Bitcoin instantaneously and put your money into a bank in a stable coin with a dollar backing it, then you win. You can beat the global inflation, hyperinflation, central bank money printing story. And I think, the big note that I kind of took away from it is like, these countries in Asia and Africa and Latin America, the incorporation of crypto, being able to put your paycheck on your phone and put it in dollars immediately and avoid the inflation that's in your country is a really powerful step for the global economy. And if you look at the IMF, right, we don't have to pay too much attention to their facts, but, the IMF does measure global inflation and global GDP, and global growth, GDP, this year was 3.1%. Next year, they're talking about global growth at 3.5%, right? So this is why it's not just the U.S. stock market that's doing so well, Dan. You look at these stock markets in Asia, Japan, even China, Turkey, Brazil, South Africa. These stock markets are up 25 and 30% each around the country. So, investors around the world recognize that productivity growth in their economies are doing better, the quality of life is doing better, and the best way to reflect that optimism around the world is the people of the countries that are less organized than ours recognize that you've got a pro-business president here that's reducing the size of government, making it more efficient, and making the dollar a stronger currency for the entire world. And I think that that's the message. That's kind of what Eric Trump said, too, yesterday, right? And he's right. And Saylor said something like there's a stable coin that was offered to be bought in Europe. So it was a stable coin in euros, right? This is out of the Luxembourg Stock Exchange sort of a month ago. 1% of Europeans bought the euro-denominated stablecoin. 99% bought the dollar stablecoin, right? The dollar-denominated stablecoin. So the value of the dollar is going up. I was talking to some Swiss clients before I came up here on Wednesday, and now they're bearish on the dollar, and Trump's an idiot, and the country's crazy, and what's going on with ICE, and all these protests everywhere. And I said, they said, we're going to sell the dollar, and we're shorting the dollar. It's going to go down forever. And I said, what's the dollar going to go down against? What's it going to go down against? And there's no answer, right? There's no answer. So they don't like the dollar, but they don't want to put it even in Swiss francs because that's expensive too. But they don't want to buy the euro. They don't want to buy the yen. They don't want to buy the pound, for heaven's sake. And they're certainly not going to buy anything in Brazil or China. So I think the prominency of the financial system here is still pretty stable. Do people want to get their money out of the financial system because they don't trust anybody? Fine, go buy a bunch of crypto, But for me, I really think the U.S. dollar is going to do well, and I think money continues to flow into this country. If you look at the data, I mean, the cash flows into the United States, Dan, in the last quarter or two is unprecedented. It's like $21 trillion have come into this country, right? Even with the tariff tantrum that we had in April, right? So I really do think that the stock market is poised to probably do something. And, I'm a bond guy, so all my bond guys think I'm sort of crazy this way. I'm a skeptic and a sort of contrarian most of the time. Just that's how bond trader DNA works. But I think you're going to see the stock market double in the next 5 years or so. 5 years, 3 years, 7 years, something like that. And the price earnings multiple will probably be lower. You know why? It's being driven by earnings. And the earnings that are coming out of corporate America have never been stronger. And I think that's going to continue for a while because this AI industrial revolution is really just getting going. It's just starting.
James Perry, founder, CIO, Perry International Capital Partners. Jim, thank you as always. Appreciate it.
You bet, Dan. Have a good weekend. Thank you.
You too. And he joined us on the Turnkey.Pro answer line.